once you understand Bitcoin, right, you have anxiety about being short. Once you understand it.
Completely terrified of not having enough.
Here's what I'm thinking, Raoul. It's like, I think everybody's too short term on this stuff. You want to really understand it, step back from the noise, look at the big picture. Everybody thinks, well, Bitcoin's too volatile. When people like me or these other institutions get into it, we've got computer programs that are trying to buy it every minute of the day, day and night. And pretty soon, there'll be one set of computer programs talking to another set of computer programs.
Volatility comes
There's
down.
no people involved, right? There's no people involved, and the volatility is collapsing, right? It's already collapsing. Anybody that's watched this stuff over the past 3 months, you would see the volatility is coming in. The other day, I'm watching it. Bitcoin's less volatile than Apple. It's definitely less volatile than Amazon, less volatile than all the big tech companies. It's like, who are these people that are selling it to me? Like, I can't believe someone is willing to sell it to me. But I'm thanking my lucky stars. I'm like, hit me again, hit me again, hit me again. I'm not selling it, right? When it goes up by a factor of 100, I might be borrowing a little to go buy something that I want. But what am I going to buy with it? Right? That's better than what I'm buying, right?
While most people obsess over short-term price moves, the real story is playing out quietly beneath the surface. Bitcoin is transitioning into a new phase one that's fundamentally reshaping its role in the global financial system, according to Michael Saylor and Raoul Pal. We are living through one of the most overlooked financial turning points in decades. Since the approval of spot Bitcoin ETFs in early 2024, institutional involvement has surged. Over $200 billion in trading volume has flowed through, with major firms like BlackRock and Fidelity securing substantial positions. More than 240 companies have now added Bitcoin to their balance sheets, and yet retail investors remain hesitant, distracted by volatility, waiting for the right time, or relying on old frameworks that no longer apply. This growing disconnect between what's happening on-chain and what people think is happening in the market could be the defining feature of this cycle. If the trend continues, Bitcoin may no longer be a speculative play, it may become the foundation of the next monetary era. And those who understand this shift early are positioning themselves accordingly.
Every central banker wants to print more money. And every intelligent investor is telling you that cash is trash. What would you do if you're me?
I came to the same conclusion you did. I mean, it's basically you need to look for an asset that's going to protect you in a number of scenarios, that has a high expected upside, that beats the cost of capital. And so that's the only thing I can think of. And so to me, it came down to golden Bitcoin.
You're going to lose 99% of your money if you put it in cash. Okay, so we all agree on that. Okay, this is the thing that people don't say. You're going to lose, for sure, 85% of your money if you put it in gold. You're going to, for sure. By the way, and that you're assuming that nobody invents a better chemistry for gold. We don't find gold anywhere else. Nobody invests any more money in gold mining. Nobody gets any smarter, and the gold price doesn't go up too much. And if all those things are true and people still use gold, you're going to lose 85% of your money. But if human ingenuity kicks in, gold's a commodity, you're going to lose 90% of your money in gold. Now, if you put your money in Bitcoin, you're keeping it all. You're not losing anything. If you don't believe in fully diluted Bitcoin count, you have a 15% loss in 100 years. But if you do believe in it, there's no loss. Now let me give you another analogy. You want to cross the Atlantic. If you cross the Atlantic in a vessel made of fiat currency, it's like stitching together a bunch of inflatable rafts. By the way, you're crossing the Atlantic in an inflatable boat with a leak in it. Or you want to cross the Atlantic in a gold vessel, you're crossing the Atlantic in a wooden ship. It's sort of good, but it's rotting, you know? It's a wooden ship. It's better than inflatable. It doesn't have a leak in it, but it's wood and it's going to decay. It's decaying 2-3% a year. You're crossing the Atlantic in Bitcoin. It's a steel hull freighter. The thing about steel, you know, like I say to the guys, I say, well, why do I want a steel boat? They go, well, because steel is indestructible and the welds are harder than the original steel. If you put a hole in steel and you weld it, the weld is stronger than the original material. Steel will last as long as you maintain it, will last forever. Okay, so rubber boat, wooden boat, steel vessel. And now here's an epiphany, right? I mean, if that's not enough, right? I mean, like, there's no comparison between losing 80 to 90% of your money versus not losing any of your money. There's no comparison. The gold standard, good idea in the 19th century, right? The best idea you could have in the 19th century. But I mean, just like wooden ships, pretty good idea to have wooden ships if you're the British Empire, if that's the best you can have, you know? Now along comes Bitcoin, cryptocurrency. It's when I say it's harder than gold, I mean it's not just 10 times harder because it goes 100 years without losing any of its value. I say it's harder because it's an organic nest of cybernetic hornets feeding off of encrypted energy. It's a living thing, which means that the miners are going to keep upgrading their equipment. The developers are going to keep upgrading their development. The nodes are going to change. Everybody in the ecosystem is going to change. And they're changing in this terrifying Darwinian, capitalistic, libertarian, aggressive, winner take all, hold no bars, no one companies holding, like I've been CEO. I thought I was right. I was wrong. You could be the most brilliant CEO in the world. Anything that's controlled by a CEO is crippled. Controlled by a state is crippled. Controlled by a country, it's crippled. This entire thing is its own ecosystem. Gold is not going to get 1 million times smarter in the next 10 years. It's not thinking at all. It's a lump of metal lying there, right? Nicholas Taleb wrote Antifragile. I think Taleb is brilliant. I love all of his books, read every one of them twice, right? Bitcoin is an anti-fragile, evolving thing. It's hardest currency because it's getting continually exponentially harder. It's getting harder, but it's also smarter, stronger, and faster than gold, right? It's smarter because I can create a computer program. I can put it on a machine behind that bar, and I can have it make 1 million trades with your crypto every night while you're sleeping and move it around, right? But I can't do it with gold. If I want to move $100 million of gold, I got to put it on a jet, fly it around the world. It's $250,000 to physically deliver $100 million worth of gold. I can physically deliver $100 million worth of Bitcoin in $5, right? $5 in 30 minutes, depending upon how risk averse you are. But if I want to move it, I can put a piece of software on it. By the way, Raoul, when I move $100 million into a crypto exchange to buy crypto, I got to talk to like 3 bankers on the phone, and they're asking me for my birthday, Raoul. You can go on Google and you can Google Michael Saylor, and do you know what you don't even have to click. Do you know what Google puts underneath the Google for my birthday? My birthday. So the banking system is running about 1 million times slower and less secure to move this stuff around. When I put this elemental energy into Bitcoin, it's smart because it's getting smart as fast as the smartest crypto bank can program something intelligent. And I am in awe of how many of these things are going on so fast. DeFi and CeFi, right? It's not clear to me whether you're going to use DeFi or CeFi. It doesn't matter. Whatever is going to work is going to work.
It's all happening, yeah.
It's faster because it's dematerialized gold. Summary of my entire meandering analysis is Bitcoin, if it's not 100 times better than gold, it's 1 million times better than gold. And there's nothing close to it. And most people, they're focused upon stock to flow is better. And what they haven't factored in is that the smarter, faster, stronger makes it 1,000,000 times better, and it's steel to masonry for the firmament of the 21st century financial ecosystem.
I love that analogy. So here's another question for you.
After eliminating real estate, equities, and even gold as reliable long-term stores of value, each compromised by inflation, taxation, or dilution, Michael Saylor makes a case for Bitcoin. As the superior alternative, its fixed supply and antifragile design set it apart. Unlike property, Bitcoin doesn't require upkeep, can't be taxed into obsolescence, and isn't vulnerable to political seizure. Unlike equities, it carries no counterparty risk, no debt exposure, and no boardroom missteps. And unlike gold, Bitcoin is immune to supply inflation and isn't burdened by complex custody logistics. Perhaps most importantly, Bitcoin is the only asset that has consistently outpaced the expansion of the Federal Reserve's balance sheet. In an age where currency debasement is no longer rare but routine, that makes it uniquely suited to protect purchasing power across decades. Let's return now to more insights from Saylor and Pal.
Look, I want to ask you two questions.
Yeah.
Two questions. The practicalities, right? So there is the terrifying moment when you transfer your Bitcoin from the exchange to your hard wallet. And you're like, fuck, I hope I put in the right numbers, because there is nobody I can call up at the bank and say, oh, I made a mistake in the transfer. Did you not get the terror of doing that? And how do you store it?
Okay, well, so a couple of points I'll make. One point is, I can't give you too much details about how we do it and how we handle our crypto, just for security reasons.
Obviously.
Generally, our approach is to work with institutional grade crypto exchanges and institutional grade crypto custodians. If you want to trade this stuff, you need a great team of like over the counter brokers you work with, and they have to have great technology, because you're going to buy this thing in 89,000 small bytes of 0.2 Bitcoin each. If I'm in the market, you don't know I'm in the market, right? I get a laugh when I watch people come in and hammer the price up by $100, and people are thinking, is that some whale? Is that well, if you wanted to buy $100 million of it, there's no way you're chasing it up $100. So I'm waiting for someone to panic, at which point I'm going to buy $10 million in 1 minute, why they think they're getting the better of me, right? That's the way you're going to do that. And then my last point is, while I'm sitting there for all those days and I'm trading this stuff, and I'm like day and night, right? Day and night trading it. Everybody thinks, well, Bitcoin's too volatile. When people like me or these other institutions get into it, we've got computer programs that are trying to buy it every minute of the day, day and night. And pretty soon there'll be one set of computer programs talking to another set of computer programs.
Volatility comes
There's
down.
no people involved. Right? There's no people involved, and the volatility is collapsing, right? It's already collapsing. Anybody that's watched this stuff over the past 3 months, you would see the volatility is coming in. The other day, I'm watching it. Bitcoin's less volatile than Apple. It's definitely less volatile than Amazon, less volatile than all the big tech companies. That's the story. My last point, it's like, who are these people that are selling it to me? Like, I can't believe someone is willing to sell it to me. But I'm thanking my lucky stars. I'm like, hit me again, hit me again, hit me again, right? And I see these guys on crypto Twitter, and they're like, yeah, Saylor's going to buy it, then he's going to dump it. Or he's going to buy it, he's going to like buy another company with it. And I'm like, or he's going to buy it until he gets like this profit, and he's going to do whatever. I'm like, they don't really, there's a lot of traders in the market. They don't understand the mindset of longs. Like, I'm buying it for the dude that's going to work for the dude that's going to get hired by the guy that takes over my job in 100 years. I'm not selling it, right? When it goes up by a factor of 100, I might be borrowing a little to go buy something that I want, but this is, what am I going to buy with it? Right? Gold, fixed income, sovereign debt, cash equivalents. Every other treasury asset's got a negative real yield. What am I going to buy with it? No, there's no other asset to buy with it.
And that's why I got into the irresponsibly long thing. In the end, I just looked at everything and said, right, fine, you can trade around, do stuff. But if there's anything you actually want to put a real position in for an extended period of time, there is only one thing I can really see. I've got gold in a storage vault, and I'm like, I can't see the point. And you're tipping me over the edge of saying, I can't see the point. I like gold. I have no problem with it. I'm not going to hold it for 100 years. So I don't really care, but I kind of like Bitcoin's going to swallow the world.
If I told you gold has a minus, it's got a minus 3% real yield.
Yeah, but I don't mind because I'm likely only to hold gold for 3 years. I'm not, Bitcoin's different for me, but gold for 3 years through this particular transition phase. So maybe it goes up 100% and I lose 10% in negative real yield. That's okay to me in that time horizon.
I think that, and this is where time horizon matters so much. Let's say when you go out more than a decade, if you go out more than a decade, all this stuff, all the noise drops away. Everything gets really clear.
Totally agree. Totally.
Right?
Agree.
And when you come in less than 5 years, there's a lot of different options you got to consider. So the real question is, what's your time horizon here?
Yeah, 100% agree. And, and that's exactly what the conclusion. But for me, why I'm so interested now of all time, really intensely focused, is across almost every single time horizon, it now looks superior. That won't always be the case. There'll be a time when, whether it's technology stocks or whatever it is, will outperform Bitcoin. But when I look at almost every time horizon, going from a month, that would be the shortest I'd look at, a month out to 100 years, Bitcoin looks like it's going to beat everything for the time being. Great. That's a home run opportunity.
Michael Saylor and Raoul Pal, two of the most respected minds in global finance, arrive at a striking convergence. Bitcoin is becoming the centerpiece of long-term capital strategy. For Saylor, it's digital property engineered to preserve value for centuries, free from the decay of inflation and political interference. For Pal, it's a macro asset, a direct mirror of global liquidity trends, more responsive than anything else in modern markets despite their different backgrounds. Both see Bitcoin as a financial breakthrough uniquely suited for a world where trust is eroding, currencies are devaluing, and traditional institutions no longer offer the protection they once promised. In that landscape, Bitcoin isn't just a hedge, it's a foundation. As this monetary transition accelerates, the question is no longer whether Bitcoin will matter but who will be positioned before the rest of the world catches up.